The ACCC wants to investigate Kaufland. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of HeiseSays. I've got my stein of coffee and I thought we'd have a look at this article from the Fin Review, written by Sue Mitchell, about the ACCC to investigate the Kaufland exit. Now, ever since I had a run-in with a crypto scam and tried to expose it on my channel here, called Cloud Token, you can find that video. They threatened to sue me. It was quite interesting with some lawyers, and I'll do a video about that soon. But I contacted ASIC, ACCC, all these organizations, because they were a ASIC registered business. They'd used an Australian business to legitimize their scam. And what do you think ACCC did or said? Yeah. So, in some ways I'd say these are rent-seeking organizations, or maybe it's just my own bitter and old man experience. Let me know if you've had any good experiences with the ACCC. If you've tried to report a con or a scam that's taking advantage of suckers, what they did. The competition watchdog will investigate allegations major fresh food suppliers plan to withhold supply to German retailer Kaufland in fears of reprisal from Coles and Woolworths. Suppliers have alleged a formal or informal agreement between leading fresh food companies, including fruit and vegetable suppliers, to withhold supply from Kaufland was one of the factors contributing to its shock decision on Wednesday to withdraw from Australia before opening its first store. What do you think, guys? Judging by the reputations of Coles and Woolworths, would this surprise you in the slightest? Would this surprise you in the slightest? I don't think it would for me. Not what we've heard about Coles. I've worked for Coles in a professional capacity. Yeah, I won't say any more. It's masters all over again, said one supplier, referring to the decision of major hardware brands to not support Woolworths' failed home improvement change for fear of being kicked out of market leader Bunnings. That isn't really... I wouldn't say that's why Masters failed. It's because Masters brought an American-style model over to Australia, which had a completely different approach to home renovation than the Australian market. They had a much higher cost base for their fit-outs, they had a different aesthetic inside, and they were offering a different range of services. They were trying to break into the refurbishment business. They had their own senior builders there. I know this because I was negotiating with people in the organization there to provide services to them. And it was a very risky sort of mess they were getting involved with. They had people ordering building products and materials, importing them from overseas. Okay? They were importing them from overseas that had no idea. They were treating building materials, wiring, an example, look at the flammable cladding. They were treating these materials and these products like you would ordering a can of beans, ordering this other stuff. They had no idea what they were doing. And this is from one of the senior people who was working at Masters at the time, who was one of their licensed builders, who was taking responsibility for the installation of a lot of these things. So I wouldn't blame it all on this, guys. I wouldn't blame it all on suppliers. But then again, Coles and Woolies acting like bastards and bullying their suppliers, I mean, that's common knowledge. Everyone's aware of that, aren't they? If not, have a look at some of the stories in the years past of just how Coles demanded refunds and just treated their suppliers like crap. Kaufland realized it was a game they couldn't win in the short term. They would have to look at 10 years of losses. Well, yeah, that's what happens when you enter and break into a new market. You've got to have a loss leader. That they would have accounted for that. Otherwise, they should have. Australian Competition and Consumer Commission Chairman Rod Sims vowed to investigate the allegations and called on people with knowledge of the situation to come forward. We'll definitely have a look at this, Mr. Sims told the Australian Financial Review. Agreements between competitors not to supply certainly raises cartel concerns, and the law is pretty clear on this, he said. Even if it's less than cartel behavior, you can also deal with it now under concerned practices. We would be extremely keen to talk to anybody who has any information about this. We have very sophisticated processes for protecting the identity of anyone who does come forward, he said. So the winners and the losers. Coles, Metcash and Woolworths will be the biggest winners from Kaufland's unexpected exit from Australia, while shoppers are set to lose out as food and grocery prices rise. Analysts say Coles and Metcash had the most to lose from Kaufland's entry into the $110 billion food and grocery market, and had the most to gain from the German discounter's abrupt decision to pull the plug before opening its first 30-odd stores. Woolworths was likely to be least affected by Kaufland's entry, given its leading market share, but stood to gain from its exit because food prices were likely to continue to rise after returning to growth last year, analysts say. Rising food prices enabled retailers to recoup costs and are conducive to like-for-like sales growth and margin growth. Kaufland's exit is a significant positive for the industry as barriers to entry have increased and food inflation is more likely to persist, said JP Morgan analyst Sean Cousins. The reasons dry grocery inflation has ended is that Woolworths allowed it to occur. We suspect largely to offset its rising labour cost pressures, Mr. Cousins said. So higher food prices. The entry of Kaufland could have seen a return to dry grocery deflation. This is no longer the case, and hence an impediment to dry grocery deflation ending has been removed. Citigroup analyst Brian Raymond says Kaufland's decision to exit Australia was likely to contribute to higher food price inflation. Kaufland's entry was expected to disrupt what is currently a very rational grocery industry over the past 12 months, said Mr. Raymond. We now see no near-term impediment to the constructive pricing environment remaining in place. Kaufland's exit reduced the risk to long-term profit margin, said Raymond, and also made it less likely that Kaufland's sister chain Lidl, which is similar to Aldi, would come to Australia. Woolworths shares hit an all-time high of $41.58 on Thursday, before closing down 0.9% at $40.94, taking gains this week of almost 5%. Metcash shares were flat at $2.65, and Coles slipped 1.9% after gaining 3% on Wednesday. Kaufland, which is owned by the world's fourth largest retailer, Schwarz Group, says it would withdraw from Australia to concentrate on its core markets in Europe. The announcement came only a week after Kaufland's Australian director signed off on another $100 million capital injection from its German company, taking paid-up capital to $523 million. Kaufland staff notified. Kaufland Australia's German-born managing director, Julia Kern, was informed of the decision in Germany on the weekend and delivered the bad news to staff after flying back to Australia on Tuesday night. She insisted on telling staff face-to-face they had to hear it from her, a spokesperson said. Most Kaufland staff had been told they will have jobs until the end of March, but the retailer will return a core team to help sell assets, which includes at least 10 freehold store sites, exit leases on another dozen stores, and terminate contracts with builders and suppliers. A Kaufland spokesman dismissed suggestions the decision to withdraw was prompted by weak retail spending, pointing out that the food and grocery market remained robust. The retail woes are frumpy, the spokesman said. The company line is to focus on the European operations. Well, then why the hell did you invest $500 million on the other side of the world? Analysts question whether the retailer, which sells general merchandise as well as food and groceries, had second thoughts about its long-term prospects in Australia, which is one of the most concentrated retail markets in the world. The gap in the market that Kaufland will be filling was never obvious. Hypermarkets have not proven successful in Australia, so the offer would need to win customers over, yet the need for such a format, especially given the challenges facing discount department stores, was not obvious. Lawyers said Kaufland faced the threat of legal action from suppliers, contractors, employers and landlords, left in the lurch by its abrupt change in tack. One retailer said several senior staff had resigned in recent weeks to join Kaufland and were still on gardening leave when the announcement was made. Kaufland mentioned an orderly withdrawal, which would seem to constitute an acknowledgement of outstanding commitments that it may have to deal with, said David Krylowski, who leads KHQ's commercial property and development team. Suppliers, builders and other consultants who had hitched their wagon to the Kaufland train may be feeling a little bitter, he said. Yeah, I mean, that's going to be tough. that is going to be tough, particularly if you're working on a job or you plan for this income coming in. If everything else is slowing down, the construction game, guys, we're seeing it's going down. If you'd won a job like this could be enough to keep a practice going, a business going for a year or two. Mr. Kraulikowski said he had no inside knowledge on why Kaufland pulled the plug after breaking ground on its first distribution centre only 6 months ago and securing sites and planning approvals for at least 20 stores. Although Kaufland had secured a variety of development locations, finding appropriate sites had been a challenge, he said, due to the highly restrictive planning laws. Kaufland's timing was also slightly off, he said. Had it been ready to take advantage of the failure of the Masters experiment, for the best sites were gobbled up by other swath of investors and developers, such as the recently IPO'd Home Consortium, perhaps the story would have been different. Australia's market may seem ripe for a new competitor, but setting up in a foreign country requires significant capital input, extreme intestinal fortitude when the losses keep rolling in, he said. Kaufland's Australian operational losses of $25.8 million in the 12 months ending February last year, according to the ASX accounts, taking accumulative losses to $30 million. In some circumstances, particularly if the trajectory is slower than estimated, it might seem better to cut and run. In some ways, Kaufland can be congratulated for not falling foul of the sunk cost fallacy, he said. So, there you go, guys. There you go. What an interesting insight that the ACCC is going to do an investigation into this. What do you think? Do you think this played a role in what happened to Kaufland? Let me know in the comments below, guys. I wonder. I wonder if it did, or I wonder if they just cut their losses and got out. Thanks for watching, everyone. Please like, share, and subscribe to the channel. If you're a fan and want to help us produce more content, we have Patreon where you can make a donation. You can also join the channel here on YouTube. We have affiliate links you can use for Amazon, eBay, and Independent Reserve. We sell pocket squares from the HeiseSays website, and finally PayPal if you want to contribute that way. Take care, everyone. Have a great day, and I will talk to you later. Bye for now.